Hi there, it's Mike Farrell with Aspen iViz, and when the weather's nice I like to work outside. So my update for you today, I'm dressed casual and outside my home up in the mountains of Colorado. I saw a headline yesterday. It said 200 billion of supply to be auctioned next week. And when I saw that, I immediately thought of three things. Well, the first thing was it's an interesting way for the U.S. government to say that they want to borrow $200 billion next week. Essentially what they're saying is that they want to borrow $200 billion and they have debt instruments that they're going to offer as collateral, so they're going to supply those to the people or institutions that loan them $200 billion next week. Kind of vague and potentially a little bit misleading unless you kind of know what's going on. So you really got to be on your toes when you read these kind of headlines. The second thing I thought of was an article that I wrote a few weeks ago. It's called Decades of Debt and Dollar Doubts. It's got some detailed explanations in there that you might find interesting and helpful to understand when you see headlines like this. The third thing I thought of was, who's going to buy all that debt or supply or loan people to loan $200 billion to the United States next week? Part of the concern I had was I just noticed that earlier this week the TIC report, which stands for the Treasury Inflows to the Country, which essentially means people from overseas who are making investments or loaning money to the United States, that printed for the month of August significantly lower than what they forecast, and it was a lot lower than what the previous months had been. So you got two sources of people to lend you money, or for the government to get money from. One is domestic buyers or domestic lenders, people who would buy those debt instruments. And if you're like me, a majority of the country, individuals, institutions, companies, they're pretty fatigued, they're maxed out, and essentially they're trying to pay down their debt and don't have anything left over to lend to the government. So essentially the lenders will, a majority of them will come from overseas. And with that TIC report that printed earlier this week, it says those overseas lenders are getting fatigued and not as interested in having our debt. So let me go into a little bit of supply and demand to explain what's likely to happen. In terms of supply and demand, we've already seen the government wants to borrow this $200 billion, so they're going to supply all this these debt instruments to the marketplace. If the demand is low, so you got a lot of supply, low demand, that means the price that they're going to get for those debt instruments is going to be lower, because again, there's so much supply, lower demand. And when that happens, then one of two things are going to occur. Either they're going to have to raise the yield or the interest rate associated with those debt instruments up to entice those buyers to come in and buy those debt instruments. And if those interest rates go up, or the yield goes up and the associated interest rates go up, I talk about that in that article, Decades of Debt, because we're already paying 40% of our budget every year on interest on our debt, just going to make the matter worse. Or the second thing that's going to happen is the Federal Reserve is going to go buy that debt. And again, I talk about that in the article, Dollar Doubts. That's just going to add fuel to the fire associated with dollar doubts. So we got some interesting times coming up next week. It'd be worth watching and seeing what happens, because it's going to give an indicator of interest rates likely to come up or be raised in the future, and associated inflation associated with the dollar doubts. So in the meantime, I've got a number of colleagues asking me, what should they be doing? Is there another financial crisis looming? And many people, what I'm finding is that many people are looking at alternative wealth-creating investments in non-dollar denominated assets. So I suggest that, you have a read of the article. It'll help explain what's going on. And in the meantime, you can follow me or meet me on Facebook. You can follow me on my blog, where there's a brief write-up and a link to that article. You can watch me on my YouTube channel, or you can join me in my venture. Until next time, as always, here's to your success.